Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to present the Asian session live market analysis and the forecast webinar now. Today on 6th of February, Monday. During this time, I'll be giving the forecast, session-wise forecast for the 5 days of the week, 6th to 10th of February. Besides, I'll also give the levels in which the currencies are expected to swing during this week. Besides, I'll do the market reading using the initial lows and the highs which are set. And using the live market code page, how exactly we can read the intentions of the players, I'll explain. Besides, we will do the trading strategy analysis in order to find out how exactly we can limit the risk and maximize the profit. So the three components of the webinar, namely the derived forecast, market reading, and the trading strategies are to be explained now. To start with the forecast. This is the first week of February. Last week I was seen, 1st to 3rd of February. It was falling in a week wherein the month of January gets over and the new month of February starts. So as a result, you have seen the monthly trend reversal move. The players made a very volatile move, either way swings in the market. Now from that of the first week, 6th to 10th of February, they are expected to make the swing and gain moves in the market. So in other majors, you could come across that USD gaining, USD weakening move. So initially they will start with that of the week beginning false move of a slide. So they are expected to make the slide in the case of Euro and GBP during that of the Japanese session and the US session. Then afterwards they are expected to make the gains. Then from Wednesday, European session, they are expected to make the drop in the case of Euro and GBP. In order to confuse the traders, after gaining the level, they are expected to book profit and re-enter at the lower level and start gaining the levels. So this is how initially for the new month, they will just do the lower level consolidation with the buys after making the week beginning false move and then quickly gain the levels and then subsequently book profit with regard to their buys. After gaining the levels, everybody will turn bullish. Then they will sell it to such people and then drop again so that the traders who have taken higher level long will liquidate the long positions. The players will accumulate them and then continue to gain the levels from Friday and also during the next week. This way, when they do the churning, that is they buy low and sell high, buy low and book profit at the higher level, their buy average will come down. Once their buy average comes down, when they make higher level buys to rise the market, still after adding the profit, their buy levels will be much lower than that of the market level. So in the event of a sudden crisis or unexpected event, when they want to liquidate the buy positions in a market in a distress condition, still they will not incur any loss because they have got the accumulated profit to start with before taking fresh higher level buys to rise the market. Only when they make the higher level buys, the market will go up. And when the traders buy at a higher level and if the market is not going much higher, that indicates that the traders are buyers but the players are sellers. But when the players are the buyers at the higher level, the market will show the intentional move on the upside. So when the intentional move on the upside is a slow gain in the market without much of a drop, and pip by pip they will gain the levels. So that means they are inducing the traders to sell at the higher level, thinking that the market might show a strong resistance near that of the derived resistance, and the traders will take sell position, the players will absorb them and then go above that of the resistance and quickly gain the level. So all those who have gone short will go in for a short covering. That's what happened last week in Australian dollar. Many of the traders were thinking that Australian dollar has come to that of the resistance, that it could come down drastically. And then what the players have done, straight away gained the level almost close to 0.77. So this is the way they do it, and they don't make a big drop, and they make only a small 50 pips drop and accumulate the buy positions and then start gaining the level. So if the trader who has taken a sell position at a lower level, expecting the market to come down to book profit, then as the days proceed, will come across the loss will become bigger. And that sort of moves the players are expected to make during the monthly trend reversal time. So keep that in mind. Monthly trend reversal will be one-sided move. Then coming to that of the levels in which the currencies are expected to swing, Euro formed the initial 1.0774. Here it shows 1.0714, that was low of Friday, and the high is 1.0798 or 99. So they are not breached the low or the high. They are now closer to the low, but not breached it. And in the case of the GBP, 1.2478 is the low, 1.2499 is the high. They are not breached the low or the high. Then in the case of yen also, in the case of yen also, 112.23 is the low, 112.71 is the high. Then in the case of CHF, 0.9908 is the low, 0.9928 is the high. They are not breached to the low or the high in all these currencies. Then in the case of Canadian dollar, 1.3014 is the low. They just breached it by 3 pips and then gain again. So they are expected to make either way stop-ins in the case of USD CAD. So to start with, they are handling the commodity pairs, and also you come across a contrarian move in the commodity pairs. So in the sequential move, they will just handle the commodity pairs. Then subsequently, they will come to that of the yen and yen crosses. Then the majors and the European crosses in the trending move as well. Then Australian dollar, 75.25 is the low, 76.25 is the low. Is a mistake. Then 76.96 is the high. Sorry, there is a typographical mistake. They are not breached. So in all the currencies, they set the initial lows and the highs, and they are not breached them. It indicates that they are just waiting for the traders to commit positions. They are making small moves here. If you see the net change, Euro is showing negative net change. USD is also showing negative net change. Then GBP is showing negative net change, and CHF is unchanged. Then Canadian dollar is showing negative net change. Australian dollar is also showing negative net change. Just about 10 minutes back, all the currencies were showing negative net change. That indicates that the players are just let loose the market so that the traders could take some sell positions. Then later on, they will firm up and induce them to do the short covering and then drop again. Because only when the traders come for short covering, the players will be able to sell at a higher level. So you have to keep in mind that the players are here to trap the traders, and only then they will be able to make their intentional move on the upside or the downside. The forecast says that they are expected to make the intentional move on the upside. But this week, they are expected to make the high level consolidation with a quick drop as an extended drop by Wednesday, Thursday, and induce the traders to liquidate the higher level long position what they had taken, and then continue to rise the market, so that when that market comes to resistance and drop, then immediately the traders tend to think that next time when it comes to resistance level, we should sell, because initially they just taken the buy position once the resistance is breached, but the market dropped. So next time they will think that it is a resistant level, and there could be a brief noise above that of the resistance level, then they will try to take sell position, but the players will continue to gain and induce the short covering. So this is how they are trying to make the moves in the market, and we need to really understand that how exactly the players aim to make the moves from time to time with the help of the initial lows and the highs. So at the moment, when you are noted down the initial lows and the highs, we find that they are not breached the low or the high, indicating that they are just consolidating. Once the spread becomes more than 40 pips between the initial low and the high, then later on we can commit positions. We'll be able to really see some profit. Yes, the code page is showing some lows and the highs of last week. It is not changed. Actually, Aussie also, the lower level is slightly above this. Anyhow, they are not breached the low or the high. Now, with regard to the recommended trades for today, one can take a buy position when they are making a downward stop and below that of the initial low, and they are expected to come down below that of 1.0750, the psychological level, and then start gaining it. So at that time, we can take a buy, and then afterwards, when they gain the levels, we can book profit. Then in the case of GBP also, they are expected to hold here, and then when they're not breach the low, we can take a buy around the around that of the low. Then afterwards, when they gain, we can book profit. Then also in the case of USDN, in order to trigger the market to make a downward stop, and they could make a downward move closer to low and then start gaining the level, at that time we can take a buy, then it will be showing profit during that of the US session. So that way we can trade when they are making downward stop and below that of the initial lows in all the pairs. Now these are all the market timings for the day, and each day is subdivided into 3 sessions: Japanese, European, and the US session. In between the session, there is a gap time, and during the gap time, the players make false move. And in a session, the early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. Today being the week beginning, so they are expected to make the contrarian move, and the move what they are expected to make from tomorrow, opposite to that, we could see the moves today as a week beginning false move. So overall week beginning false move, they will make the move, and that will be the move opposite to that of the intentions of the players. So when they make the slide, we can easily understand during the trending time that they are making week beginning false move on the downside. So they intend to make a rise. Then from tomorrow onwards, what you can do, take buy position near the top of the low buy position whenever they make the slide, either during the early session or the late sessions, and then we can try to book profit when they are gaining the levels. Coming Friday, I'll be out of station, so I'll not be able to present the webinar. So I'll come back on 13th February, next Monday, and give the expected market moves for the next week. So if you got any question, you can ask me the questions here in the question window. I'll be willing to give the answers to the questions. I'll show the forecast again. Bren has got a question. When the players do an extended stop and do they usually try to raise the market back to the original levels in the day, or do they do it to swing at a higher or lower level? No, normally extended stop and move is the one. We should gain back all the levels within 1 or 2 sessions of the same day. When they make a drop today and gain tomorrow, then that is intentional move on the downside, and then rise as an extended move the next day. So there is a difference between the extended and the intentional move. The extended stop and move will be a knee-jerk reaction on the downside. Quick drop as if the world is going to come to an end, as a reaction to that of the data release or a rumor or whatever it is. And then subsequently, they gain back the level within the session or the next session. And the third session, they go above the top, the level from where they have fallen. That is extended move. And the level above that of the level from where they have fallen will be a very quick move on the upside. Hope you are able to understand what I'm trying to convey. So from that of the high, quickly they will drop and then quickly reverse up to that of the high and start gaining the level slowly above that of the high. That is extended move, extended stop point. Whereas intentional move will be a slow drop from that of the high up to that of the low for 2 sessions. Then afterwards they make a consolidation near that of the low and start gaining the level slowly the next day. Then intentional move on the downside, extended move briefly, and again intentional move on the upside. That is the regular move they do. Hope you are able to understand him. The Nasdaq and Dow rally will continue. Yes, you will come across the continuation of the stock market on the upside. So don't short. You can only buy during the drop. See, first of all, you have to understand one thing. The players are here to trap the traders and earn money from that other market. So how they can trap it? They reach the high and immediately people find that following the chart that they are the resistance level. Then they try to sell. When they try to sell, the players slowly gain more and more levels. It indicates that their intention is to rise upward. When they quickly rise the market, then they want it to drop. So based on the type of move, you can easily identify whether it is the intention to rise further upward or they are just making a quick rise to reverse and drop big. Always quick moves are false moves in all markets. The players cannot do any other way of cheating the traders, only by making quick moves in the market. When they make quick moves, immediately the brain of the traders becomes stunned. As a result, the traders go in for a distress trade. So they can only make a person stunned or spellbound, then cheat him. Otherwise, they have to distract him and then cheat him. So sometimes they distract by giving various type of analysis through that of the analyst. So in the media, TV and other media which are freely available for the traders, they will create the market sentiment. That is mainly to distract the traders. After creating the market sentiment. When everybody thinks that the market is going to be bearish, they will quickly rise the market and say that market has moved because of various other reasons. So what the reasons they attributed, they simply discount it and then say that the other reasons are responsible for the market to go up, as if market is going on its own. How can the market go on its own? It is inanimate. It is a move by that of the traders, and they present it as if the bull traders have accumulated huge position because of the market have gone up. But you just look into that of the market online trading, whether we will be able to place a high level buy and buy it. Suppose euro is trading around 1.0775, you place buy 1.0785 in your online trading platform. Whether market will go up? No, it will fill 1.0775 or 76 for you. That's all. So only when the players using the bank terminal place the orders above that of the market, market can go up. Okay, Aditya, what is the forecast for the N crosses? So USDN is expected to make a lower level consolidation and then start gaining from that of midweek. So initially, Euro and GBP are also expected to, so they dropped USDN. Then they will make small drop in the case of Euro and GBP. As a result, what will happen? Yen crosses will come down a little bit, about 40-50 pips or 60 pips, or a brief downward soften. Then they start gaining the levels in the case of USD-Yen. Then drop Euro and GBP by midweek, so that not much of an action will be seen in Yen crosses. By the time they would have finished handling the the commodity crosses. Then after making a lower level move in the case of Yen and Yen crosses, they will accumulate the buy positions, start gaining the levels in the case of USD-Yen to start with when Euro and GBP are dropping. Then afterwards, hold high USD-Yen and gain the levels in the case of Euro and GBP also. As a result, Yen crosses will go up. So Yen crosses will go up after making a downward move. Wait for such downward move and then you try to take buy position, you will be safe. Don't look into that of the chart. The chart might show some supports, but the players are going to breach the supports and go below and accumulate. Can I explain, if possible, more reason on the players not being able to hit trade stops after a stop and just happened? No, you are asking a question that after one stop and they will not make for the stop end. No, it is not like that. If they find cluster of stops closer to that of the low, then they will try to make the downward stop end. But when they are not making the stop end, after making the initial stop end, is when the traders have taken sell positions near that of the low or below that of the initial low. When the traders think that it has breached the support and gone below, immediately they trigger the stops and also take sell positions. At that time, the players accumulate all the buys. Initially, they accumulate all the buys against their higher level sells. Then afterwards, further buys, they make it below that of the low. At that time, when the traders sell predominantly or freely, then the players find it as a great fortune. Then immediately they gain the level and rise pip by pip, start gaining the level pip by pip. And then the traders have got the tendency to average the sells. So if they have taken the sell, after about 20-30 pips rise, they will take another sell. 20-30 pips, another sell. And 20-30 pips, another sell. Then the players gain about 60 pips. What happened? Already 3 positions are taken. and all the three positions are making huge loss when they gained about 60 pips. Then automatically you'll find the drawdown will be very big. The trader is forced to cut the positions. So this is how they just trap the traders. So we have to identify when they are going to make the stop in. As I told you, they will make the stop ins during the early or the late sessions in the case of majors, and during that of the mid sessions in the crosses. So we have to watch the time as well as the levels, then we'll be able to easily understand are they going to stop with that stop rate. How you can differentiate the stop end from that of the extended move? When they just make a downward stop end below that of the initial low, and then go above that of the initial low in less than 30 minutes and stay there, and that will be a downward stop end. When they make a downward stop end during the of the late session, for example, there is no need to buy, because during that of the gap time they will gain the level, and session start time they will make another brief downward stop end, because during the swing they have to make another downward stop end before making a rise. So at that time you can take a buy. Then within the session we'll be able to close the position with the profit. So my contention is market rewards patience. Never have a feel that you have missed that opportunity. If you calmly wait, you will get the right opportunity. See, after making a drop to that of the low, they have to first of all stop cutting the new low for 30 minutes. Why not you wait for 2 hours for them to stop cutting the new low, and whenever there is a session change time from that of the Japanese to that of the European, or to that of the European to that of the gap, the US session start time. So that when they are making a drop, then you wait for the late session, then wait for the gap time for them to swing, and wait for 30 minutes of the session. Then when they don't breach the new low, you try to take near low the buy position. See, it's not necessary you have to buy at the lowest level. Even 20-30 pips near that of the low is fine, as long as they are not going to make a downward stop and afterwards, and they are expected to gain the levels. So when the rise is seen, then during the downward stop, and if we buy, we'll be able to get about 75 pips profit. When that swing is there and the firm up is seen afterwards, you should be able to get about 45 pips profit. So identify what sort of trade you can do it depending upon the forecast what I have given it. Then dollar yen will move back to 115 level. Yes, it will move 115 level soon in this week. Any other question? So no more question. So try to keep the focus copy with you and see session wise how they are making the moves. This week they will gain the levels and then suddenly drop before making another rise. As I told you that they will just gain quickly the level, book profit, and then drop again to buy back. So those who have taken the higher level buy after the rise will liquidate. So wait for Monday today, being the week beginning false move. Then wait for them to make the drop on Wednesday, and then try to take the buy position. Then either on Wednesday, once you take your book profit, and again buy back on Thursday drop, and then wait for that rise to happen, and that will be a intentional rise for weeks to come. That way you will be able to maximize your profit. I go in the position trade ideas also. Still, they are not reached the low or the high, indicating that they are expecting the traders to come. Okay, so Friday I'll not be able to give the webinar because I'll be out of station. So I'll come back on Monday. And give the webinar explaining the expected market moves for the next week. So wish you all the best in your trades. Trade wisely, trade calmly, without any market fear. Understand the market. If you've got any doubt, you can contact me through email or Skype chat. I'm willing to extend help without expecting any monetary benefit from you. Wish you all the best in your trades. See you on next Monday.